day, all. Ira Epstein with your financial market wrap-up, and this is for Tuesday, the 7th of January, 2020, and we are now just after 5 p.m. Central Time, which means the markets have just reopened. Now, if you looked at the metal update, you can see where the markets finished, but you can see that you're opening a bit lower in stock indices, and you were still down pretty good in the Dow and the S&P. The NASDAQ giving back about 9 points. It was the strongest of the indices today. Gold market jumping along with the silver market, still acting good here. And if we look at what the currencies are doing, sort of a mixed bag. Bonds and notes, pretty flat. I'm surprised that the energies are up a little bit, because when I looked at the API numbers, I didn't interpret them as being friendly, but everybody has their own way of interpreting. When we look at a weekly area chart of closes, you're down 3.75 points from Monday's close, Tuesday's close, into the open now for the Wednesday session. That's not very much. Market's still holding on. You can see that what the market's doing right here. It's sort of churning. Last night when I wrote my commentary for the subscribers that get my full research, I told them expect a churn in this market, and that seems to be the chart pattern that is setting itself up, just churning back and forth. And I said it for a couple of reasons. Number one, I'm watching the U.S.-Chinese trade deal. Number two, I'm waiting for the other shoe to drop out of Iran. I seriously doubt that they're going to be smart enough to do nothing. I think they're going to try to do something in retaliation, and when that shoe drops, the question is, how does the market interpret it? Is it too much? Is it okay, they did that? Maybe we end this tit for tat for a moment. I don't know. I don't have no idea, nor does anybody else, by the way. But what we have is a pattern that I can define, a higher high and a lower low in a churn pattern. So in terms of the market stepping out of a trend for the moment, it has. I define an uptrend as higher highs, higher lows, a downtrend, lower highs, lower lows. This is no trend when you get a higher high and a lower low together. And that's what I call going into the churn. Now, where's the 18-day average of closes? You can see how the market has been trying to hold that general number. If the market were to get under 3208.75, the previous low here, and close under 3220, and not take out these highs that we saw yesterday, well, that could start a downtrend in the market. You'd be under the 18-day average with lower highs and lower lows. But you haven't done that. So not having done it, you're still in the churn and burn area. What else is happening as this is going on? The algorithm called a Bollinger Band, which are these black lines, they're wrapping the market. These numbers, the way the algorithm is set up, looks at volatility in the market. And in that volatility, as it's come out of the market, and I know that sounds nuts because we're all saying the U.S. just took out General Soleimani. They're going to maybe attack the U.S. They're talking 13 targets in Iran that they have, and it's going to be hellacious. Okay, but the marketplace is gone flat on that news. Interesting. In terms of momentum, it's pointing down. So you've left the bullish momentum of the market when you had what we call slow stochastics that kept the red and the blue lines just going sideways over 80. That changed when the market lost it, and it lost it on Monday. It did not regain it today, and now the market's falling back. Will prices go back to the 18-day average looking for support? They could, but they've already hit it. They've hit my target of the 18-day average. So the question is, what next? And I think that's the other shoe that we're all looking at. And here you are down 5 points in early trade. In the NASDAQ, the question tonight is, will you lose that embedded reading? Now, this market was strong today. Certainly, you looked at the microchips. They were powerful. You looked at Tesla. I don't know if anybody's watching some of these things going on. Very powerful. So anything with technology was running. But now, are we ready to get that little bit of a setback? That is the question in the market. You're still bullish until you lose that reading. And if you lose it, I'm still just looking for the 18-day average of closes. This is still one of the stronger indices with the higher lows, higher highs. Today's action is going to be important because the high today of 88.94.75 did not take out 89.07.25. So if we start breaking down through the lows of Tuesday, you could set up the swing line with lower highs and higher lows and enter a very flat period. It's a warning time. In the Dow, look at the 18-day average of closes. You're fighting your battle right there. You can see the pattern of the market, still one of higher highs, but just like in the NASDAQ, you're setting up the possibility of that lower highs, lower lows. Momentum is out of the overbought condition. Now, like the other indices, you had the embedded reading. Once you lose it, you're looking for the market to do what? Possibly get back to the 18-day average. Look where the market went up to. Watch what's happening. You lose the embedded reading. That puts in play the possibility that the market gets back to the 18-day average, looking to see what to do next. Makes sense? Think of where we're at. This is Monday's action. You got there today and tonight. This market is looking to see what next. And similar to the S&P, look at how the Bollinger Bands are wrapping around the market. In the meantime, when a market loses an embedded reading, what it does is it goes from being embedded typically to overbought. Then from overbought to get neutral, both the numbers have to get back under the 80 level, ideally under 70, the way that I teach charting, and they've done that. So this is a market that, as far as I'm concerned, could turn somewhat bearish. Downside target might be 28,107, and I think you all understand. We don't know what Iran's going to do. We don't know the response. If Iran does something, to what the U.S. will do. It's a big, big unknown. Trying to guess it, there's guys smarter than me that can do that. When I come to the Russell, I see a downtrend. I see a market with lower highs, lower lows, has fought the battle at the 18-day average, trying to break down even further. A sign this market has run enough to the downside. If we look at today, that's Tuesday's low at 1653. If we take that out tonight, and I don't know if it'll do it while we're talking or not, at 1653.30 at the low right now, and then we're to reverse back through Tuesday's high without taking out this low, specifically 1639.70, you could end up with the market having run its correction, ready to reverse back to the upside. But even then, I'm looking at these Bollinger Bands coming in so much, I don't know what to do with them. Again, I'm going to repeat it. This is a real difficult time in these markets. In the VIX, the market's trying to get down to that 18-day average. I don't know if it'll make it or not. You're bringing in here also the Bollinger Band, the black dash line falling, starting to come up. Again, volatility's come out of the market. That doesn't mean it doesn't come back like that. Everything depends on what's going on. Now, the reason you had a late day break in the stock indices, just to give you an idea, is the U.S. Word came out that the U.S. is preparing potential, I want to use the word potential, sanctions against Iraq if they were to throw our soldiers out without giving us the grace to get them out in a certain way over a certain period of time. The president keeps talking about all the money the U.S. has spent in getting Iraq to be independent, the money in the compounds we put, he'd like to see us paid back. I really think what he's saying is he'd like to not go. We don't need the money back per se. We need the region more stable. I'm not playing politics, but you got to read through all that's going on here. But is he throwing out the idea there could be sanctions? He certainly is. And if you don't believe they work, take a look at Iran's economy. Would he do that? I don't know. Lower low, higher high. You're trading between upper and lower Bollinger Bands in the bond market. I don't think you're trending. I think the market is just drifting here, waiting for that next shoe out of Iran. Market's not certain what to do at this time. Higher lows, higher highs in the 10-year. So this market, at least, still seeing, as I'm looking at it, some of the safe haven money still coming into this market, not certain what to do in times like this. In the ETF TLT, and by the way, I am really far along in preparing my I'm saying it wrong, my afternoon ETF and spider video. I'm probably 90% done with the charts I'm going to put in it. Our IT department is now working on getting ready so that you can just scroll along, go from energy sectors to interest rate sectors to the consumer sectors. I'm doing all that now. I don't know how many charts I'll end up with, but I'm getting to the end. And that's good news. And I'm hoping to do something maybe with a trial for some of you starting as early as sometime next week. All right. In the meantime, lower low, Bollinger bottom, Bollinger top, not trending, drifting. Wouldn't be surprised if you just hang at that 18-day average. Dollar index, lower highs and now higher lows. You do see that. Gone flat. So many of these markets are just waiting for some event to occur. Eurocurrency, higher lows, right? But lower highs. Gone flat on you all of a sudden. British pound, lower highs, correct? Higher lows. Stuck at the 18-day average. I mean, this is classic what I teach is markets are waiting to see where's the next shoe going to drop. In the Japanese yen, got the lower low, a higher high pattern. Now, if you take out Tuesday's high, which is right now, and that was 92.71, you'll get higher lows, higher high pattern in a market that momentum has flattened out. So the bit of a correction it was having, well, it's stuck in the 60s right now, drifting sideways. Resistance, 92.85. If the market pops through that, then the 100-day becomes the next resistance. On the downside, this pattern's not setting up yet anything that says down. It could if you had an outside day down. So you'd first have to take out Tuesday's highs, then get through the low, then close under the 18-day average. That's too many what ifs, so I'm watching. Bitcoin. Bitcoin is broken out of this sideways pattern. This isn't going to break out, it's broken out. The only thing that I see that can damage chart is getting back into these lows. We know that they're halving the amount of Bitcoins that happen, and that is because as to how the algorithms are set up, and many traders are talking about that, and I did a commentary on TikTok about it, and we'll see if the market can accommodate those traders that think it might break out to higher prices. In the Brent versus WTI crude, well, you don't need me to tell you that the oil that would be in danger isn't U.S. oil at this point, at least we don't think so, without something happening in our basins. It would have to be, the easier target would be Iraq oil, it could be Saudi oil, it could be anything going through the Strait of Hormuz. So the bid is staying in place where WTI is gaining on the Brent. You can see that in terms of the oil, higher lows, higher highs. This is certainly a target of opportunity for Iran if they decide to hit it. But in terms of getting away from there and throwing the name off the chart, I have downside divergence, prices holding, they've hit the upper Bollinger Band, and the market is stalling right through here. WTI crude. Again, momentum is pointing down and it's overbought. You've made your upside targets of the upper Bollinger Band. Are you going to get a pullback from this? We're going to get tomorrow the EIA numbers, so you do want to pay attention to those in the morning. For those of you that are my subscribers to my full research, you'll have tonight the API numbers in there and my reaction to them. When we take a look at what's going on with the gasoline, you have a higher high pattern. You've certainly got the higher lows. You've had them in place. You've hit the upper Bollinger Band target, and momentum turned down on you. Now, is momentum going to flatten out here, or is it going to point to even lower prices becomes a question. And in nat gas, once you hit these lower Bollinger Bands, you found that support, you're bouncing, you haven't changed the trend, you're giving the market an opportunity to work out of an oversold condition. Any readings under 30 are oversold. Now they're getting back over that number. If I take you back here, you can see that they were under that. They never did embed. Embed means both the red and the blue, the K and the D line as they're called, are going sideways under 20. It never did that. Instead, the market kept hitting the lower Bollinger Band, finding support against it. Eventually, cold weather is going to come. So I think the traders like me are looking over their shoulders like that saying, where's that cold weather? We'll probably get a bounce if we get a severe cold spell that can hit, but I haven't seen the weather forecast enough to know about that. Want to remind you about our research. We cover all these topics and many more, the grains, the soft markets, and so on. If you haven't seen what we do, you might want to take a look at it. You need to be put on a free trial. How does that work? You're going to get an email from us with the research, and/or you can get a free trial also to our charting software where all this is included. Now, the coolest part of getting into our software programs, our charting software, which will let you try for free if you haven't done it before, is that you're going to also hear our oral updates. You won't hear those without that. And you're going to hear throughout the day our traders talking about what they're seeing in the market, what they think's going on, who's doing what, and so on. To find out more, give yourself a free trial to it. Call my staff. They'll explain it to you. It's simple as can be. No credit card. We're not asking for that. You can go to our website, www.iraepstein.com. On the bottom right, it'll say free trial. Sign up for what you want there, or click right up here. If you're on YouTube, it'll take you right to that page. I'm Ira Epstein. Have a great day, and I'll talk to you tomorrow.